This is our video Forex blog for Monday, December 13th, 2010. As you've seen from past Forex blogs, one of the best ways of trading using our software is to find a super strong currency and buy it versus one of the weakest. Today, the yen was extremely weak from 10 o'clock last night until about 5, and the weekly and monthly trend underneath it were down. You want to sell this currency against one of the stronger ones. The euro had decent strength during that time. However, the weekly and monthly trend were down. The yen, on the other hand, the Australian, on the other hand, had a weekly and monthly trend that was up and was also strong. So you'd want to buy the Australian versus the weak yen. Let's take a look at that. Last night, a couple hours before midnight, and you can see this trend just continued up. Our Fibonacci areas where we expected some major selling, finally the price double topped up there. There was never extreme real-time momentum today, but you might have wanted to get into this trade here, exit at the previous day's high and the previous week's high, and then when it breaks out here, this would have been your profit target, and this is your second profit target. One of the weaker pairs today was the pound. Unbelievably weak. The Swiss, on the other hand, was extremely strong, and the weekly and monthly trend were up. So you'd want to sell the weak pound versus the super strong Swiss. Let's take a look at this chart. Notice this strong 200 pip drop. Again, you find the weakest currencies and you sell them versus the strongest, and this is oftentimes what happens. In addition to the Swiss being extremely strong today, we also had the Australian very strong today as well. Let's look at the pound Australian sell. Notice from 3 o'clock onward, about 150 pip drop. Now if you missed that first move, you might have seen this right here with this little flag pattern, you get short, or this multi-hour sideways rectangle pattern right here, and it went down to our next trading zone, which was the low, and our trend reversal triangle oftentimes nails the end of moves. This one here failed, this one worked, and this one worked. So as you can see on this chart, 2 out of 3. In addition to using the currency meter, let's look at the individual charts and point out some of the best trades today. Here's the euro dollar. Now in this case, the weekly and monthly trend's down, but once a currency breaks above the hourly, and you have a nice little wedge pattern right here, making higher lows, breaks out, and the next area of resistance isn't up here till 1.3216, which is the 10-day moving average. Because the weekly and monthly trend's down, that would have been an excellent place to get out of this trade. Now it went a little bit farther than that. Notice the extreme strength here. This is our trend explosion system. Anytime it comes to or real close to or above the dotted 20 line, those trends are very likely to continue unless the market's above the upper white band. So you have a nice little pullback trade right here, you buy the breakout, you're risking 5 or 6 pips, and this is your next profit target up here. You have a potential of 50 pips. Now in this case it shot way more than that. However, you're risking about 10 pips for a good chance of making 50, and in this case you were rewarded with considerably higher move, i.e. more pips. Your stop would have been up here. As soon as it moves up 5 pips, you cut your stop in half. As soon as it moves 10 pips, you move your stop to break even. And every time it goes up and goes sideways, you move your stop underneath this area. And when it's above the upper containment band here, what I usually do is draw my Fibonacci profit target and usually exit at one of these fib targets. And in this case, there's weekly R1 pivot here. Our trading zone, I would have got out of the entire trade at 33.75 and missed this extra 50 pips. I would not have considered it to move that far because the weekly trend was down. Every once in a while, these kind of things happen. Here's the pound dollar. The monthly trend started off up, and then the monthly trend was down, the weekly trend was up. We had 2 narrow range patterns here in a row. You wouldn't want to sell that with major support underneath it, but the next area of support is the previous day's low. When that breaks, this is your first profit target, this is your second. A lot of times when a currency goes sideways that long, it's likely to move to 2 profit target levels, 2 support areas. And so you get short there, and it fell about 50 pips. It wasn't super weak, and when it double bottomed down here right near our lower containment band with a little bit less weakness there, and you have a 1, 2, 3 pattern right here, you might have gone long right here. Well, this is your first, this is your second profit target. I wouldn't have bought this breakout right here because you had that fib level above it. But then you have off the chart strength. So you might have got into a trade right here, good for about 25 or 30 pips, and it went right to our next fib level. When a fib level is broken, which usually has some selling at it, it causes a lot of stop orders to get hit and causes, you know, the market to explode up like that. Dollar Swiss, daily, weekly, monthly trends down. It broke underneath the hourly moving average, previous day's low, weekly pivot. This was your first profit target, but the market shot through it. Notice extreme weakness right here, and you have a nice little pullback trade. Right to a resistance. Once this support area gets broken, it then becomes resistance, and you could have shorted there where this is your most likely profit target, but just like many of the currencies today, they just kept going and going, and you want to use our chandelier trailing stop or one of our other trailing stops to get out of the trade. Dollar CAD, the fib level last night was our projected fib level, which was likely to be resistance because the price was underneath it. Contained the price last night, contained the price today. Daily, weekly, monthly trends down. You wouldn't have wanted to sell right here at the hourly moving average because we have the 10-day moving average right here. But once that got broke, you could go short with this as your first profit target. It really wasn't that weak, so you'd be watching this like a hawk. And then this was your second profit target. Again, because it wasn't that weak, I probably would have exited my trade here. When it went up with no strength whatsoever, came back down and broke down here, you want to go short. This was your first profit target. This is your second. And if it goes right through the first profit target, you hang on and wait for the second one. And this trade right here, you might have been short around 60 and out at 30. That's good for 30 pips. Notice the double bottom with divergence. Anytime you have a double bottom, especially at a support level, our projected fib level, our fib levels high and low both contain price today, so I did an excellent job on the fib levels. Double bottom with divergence, counter trend buy signal, great counter trend trade, but this is your first profit target, this is your second. Now it went up without that much strength, so I would have probably got out of my entire trade right here and missed this extra 10 pips. As I showed you earlier, the Australian and New Zealand were pretty strong today and the dollar was weak. Daily, weekly, monthly trends up. I wouldn't have wanted to buy this until it broke above this fib level. Once it breaks above the fib level, it's pretty likely to go to the next one, which is all the way up here. You're trading with all the trends. All the time frame trends are showing up. Notice our IntelliTrend bar is green pretty much all the way up here. So you got in here where this is your first profit target. I might have got out of that trade here, and then when it broke back above, I would have got back in with this is my next profit target. That's good for another 25 pips. And you can see nothing explosive on the way up, but you are going with every single time frame statistical trend, and you can just yank your stop up underneath each sideways consolidation low, and when it gets above the upper containment band, it's very likely to reverse. Same thing with the New Zealand dollar. However, the weekly and monthly trend were down, so I would have been very careful until it broke above the previous day's high and then did a retest here. I would have got in here, and this is my next profit target, the weekly pivot. I would have got out of probably the entire trade here, and because the weekly and monthly trend is down, I would not have been buying it anymore. I would have personally missed this, next move up. However, because the weekly trend's down, you can draw your fibs on here, and when they get up to the fib targets up here, you can do quick little counter trend moves. This one pulled back about 12 pips. You might have, at the very minimum broke even on that, gotten short up here again, and you're up about 20 pips in that trade right now, and you'd still be hanging on. The weekly trend did shift up. However, the monthly trend was pretty strongly down earlier in the day, and usually after big moves, markets retrace at least 38%. Euro yen, not the best currency to trade. Weekly trends, mixed. Monthly trends not that strong or weak. Here's a fib level. When it breaks above the previous day's high in a fib level, it's likely to go to the next area, which is more than 25 pips away. So if you want to risk 10 pips for a good chance of making 25, that's a good deal. You have the same thing here. Once it breaks above this level, you might have bought right here with a loss. It made a higher high and pulled back, and now it acted as support. You buy again here, and you draw your fibs on there, and I probably would have got out of the whole trade right here. This one has a weekly and monthly trend that's up, so when it breaks above the hourly, you might have got into this trade last night and got stopped out with a loss or two, went up to the monthly high with almost no strength. You wouldn't necessarily want to sell this unless you saw extreme weakness, but once it came to the previous day's low, that's a pretty major thing to break down underneath yesterday's low. The next area of support is very far away, about 30 pips, so you risk 10 or 15 pips to make 30 pips. That's a good deal. It's falling without a whole lot of weakness, so I'm not sure I would have shorted any more down there. Our trading zone did nail the low. If it wasn't this weak at the time, you might have considered buying there. I probably would have passed on that trade. It exploded up with tremendous strength, and it pulled back, found support at the previous day's low. I would have got into that trade here. Came back up here. Notice it's not that strong. This is a perfect example of a double top with divergence. Aggressive traders might have looked to go short right there. If the weekly monthly trend was down, I would have jumped all over that type of trade. Great example, daily weekly trend up above the hourly. This is your first profit target. If it breaks that, it's likely to go here. And we have the fib levels up here. This one went up. Again, I already showed this chart earlier, but not a whole lot of statistical strength at the high. If the weekly monthly trend was down, you'd want to sell up there. It's pretty risky to sell against the longer term trend, however. New Zealand yen doesn't have a whole lot of strength in the weekly monthly trend, and there's lots of areas of support resistance that the price could stall at any one of these, not giving you room. It's kind of like a highway. You don't want to drive a sports car on a highway like Los Angeles where everyone's going 5 miles an hour. This is what that's like. When you have all these areas where there's buying and selling at, markets oftentimes chop around. I would have totally passed on this trade for that reason. Dollar yen, the daily, weekly, monthly trend was up. It's above the hourly here. When it breaks above the high, you would have got in. And guess what? It went up to the previous week's high with almost no strength. And in fact, as it's going sideways here, you see the strength actually lessening. Great counter trend area to get short. This is your first profit target and second and third. And it just fell right through there, hit the previous day's low. That's usually where it stalls on the first time it touches. You get out. It goes back up with half the strength that it had weakness. You might have shorted again right here. I would have got out of the entire trade right here. This is another perfect example of trend reversal. Trend explosion. Anytime it hits this level on a counter trend trade, you want to get into that trade, and there's another one. CAD yen. Daily, weekly, monthly trends up, broke above Sunday's high. You might look to start looking for buys. Notice it's going up today without a whole lot of strength. So, you get out at one of these resistance areas. You might have bought this pullback right here. This is a perfect example of our Elliot two-wave fib pullback. Anytime you have a strong trend up, you draw your fib on the first wave, look to get in it near the second. I didn't draw that on there perfectly. There it is, almost to the pip, and that reversed back up about 30 pips. And then we had extreme weakness right here, so you might have looked for some shorts. The first one didn't work. You might have broke even or lost money. The second one pulled up, you go short. I would have probably got out of the whole trade here because the weekly and monthly trend's up. You wouldn't have expected this trend to just fall off a cliff like that.